Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, last week I received a great question from a client. Their question was, why is revenue different than the actual cash that was deposited? So, to me, that is a great question. I love it, first of all, because the client was looking at their numbers. Number two, they asked the question. So I love that. So, why is there a difference? Many times in business and even in the nonprofit sector, we focus so much on revenue. Revenue is actually recording of sales, recording of income. We have to understand revenue and cash is different. Cash is the actual money that's coming in. Cash is what pays the bills. You may have heard me say that many times. Cash pays the bills. It pays payroll. It allows you to purchase equipment, machinery. It allows you to invest in another business. That's a big difference. The difference why that client was seeing different numbers is because we utilize QuickBooks and we utilize the invoicing function in QuickBooks. So if you are utilizing an accounting software and when you invoice a client, that accounting system behind the scenes, it records a sale and records an accounts receivable. An accounts receivable is money that is owed to you. So the accounting system, what we call, they do a double entry. So it hits sales and it hits accounts receivable. When that invoice is paid, that money goes into the bank account and then it clears that receivable to show that that invoice is no longer outstanding. So, as you may, hopefully, you're thinking, well, if I record the invoice, let's just say in January, and if the customer doesn't pay until April, that's a difference. The cash doesn't show up until April. The revenue is recorded back in February, but once again, the actual cash does not show up. So this is where cash is more important than revenue. You need to monitor cash because cash, once again, cash is king. Cash is what actually pays the bills and keeps the door open. So you have to sometimes what I call be double minded in business. So you do have to look at your profit and loss statement. But most importantly, you want to run your business looking at cash. Too many times, as I said before, if you are focusing so much on revenue, you can actually go out of business because you could be actually burning through cash. So you want to make sure, once again, you understand revenue, revenue, cash, and accounts receivable. They all interact together. They're all intertwined, I should say. So once again, you want to make sure. I've in my last 2 weeks, I've had so many conversations with businesses due to inflation, hiring. Everyone seems like they're in a cash crunch. So don't wait until you are in a bind to go look at your cash. So, tip for the day, look at your revenue and then go look at your bank account and make sure you have enough on hand to sustain yourself throughout the month. Hopefully, you find this information helpful. Make sure you like, comment, and share, and we'll see you next time. Take care.